Hello guys, this is Nikki, you also known as Faces Trader, and you are watching the Awesome 10X Live for the global market update on September 25, 2020. It is a Friday. So let us discuss a few things in the market. I'd want to share some analysis of Tesla when after the battery day. So I want to share Sam Korus, the analyst of ARK Invest. He is, of course, one of the most important analysts covering robotics, EV, and was the primary some of the primary analysts, him, Tasha Keeney, all of them working in ARK Invest. And I think that their analysis is something worth considering. So he shared that Tesla just announced its plans for a 400-mile range, $25,000 electric vehicle, as all Tesla people know. If it's delivered in 2023, they believe that it could put Tesla 3 years ahead of the original cost curve. So batteries typically make up 20% of the cost. That means if it's a $25,000, the reason is $5,000 is spent on batteries. A 50% cost reduction on these batteries will likely get Tesla to around $56 or 5,000 divided by $56, 90 kilowatt hour. 4.5 miles means 405 miles. Let's dive in. Battery day was not just about the dollar per kilowatt hour reduction. The cost reduction means that, of course, if they can reduce the cost, it means that your mile range could increase as well. So the cost reduction means that drive performance improvements and the impact compounds. A 56% dollar per kilowatt hour reduction and a 54% increase in range. So that means that you have 4.5 miles per kilowatt hour above likely it's conservative. It actually reminds me a little bit when AMD told me around a year ago. Remember when AMD Ryzen, the Epic Ryzen, it was 60% cheaper than Intel, and it was like 80% better. So naturally, all the people would just buy AMD Ryzen rather than Intel. And of course, 1 year fast forward, you know that AMD is trading at 75.85. Last year was just trading at about less than $36, or yeah, something like that prior to announcement. So the new cells and chemistry give Tesla an even bigger edge on a dollar per mile of range plus charging and acceleration basis. So the old was, let's say, 100 per kilowatt hour. The new is, if it's a 56% improvement, so it's $56. The range would also be improving from 400 to 619. The battery cost per mile range then becomes from 10,000 to 5.6, 25 to $9. They think that is the reason why you not only have a better version of Tesla in the next three years, you also have a cheaper car. So from $35,000 Tesla Model 3, it will be $25,000. So what is the established design so important? It's easier to manufacture. They've got better thermals. RIP, I don't know what RIP is, prismatic. Imagine electrons are passengers on a plane and the tab is on the door. For seat 50F, it takes a long time to get the door. You're going to go get hot while waiting. Tabless is equivalent to having a door at every row. Electrons per people can move the way faster. That means you can charge and discharge the battery faster. Tesla's new cells makes pouches prismatic obsolete. The benefit of the prismatic cell was that it was larger, so required fewer connections in the pack. It makes module easier to construct. So the Model S, how many years did we accelerate the transition to sustainable energy? Model S started the fall of the gas-powered car. Battery day started the final blow. So the same flattening of battery costs occurred in 2010 timeframe until Tesla came out with a Model S. Now it's happening again. So Tesla Model S launched 2012, 2013. A lot of the proponents of Tesla investors bought during that time. You could see that lithium-ion battery costs have been falling down as the years go by. And if lithium would be less dependent in the future, Tesla could scale the manufacturing and make it more affordable for more people. Tesla can go mainstream. So remember, there was a claim before that Tesla could never scale manufacturing. Traditional automakers decided to go electric, then they can scale rapidly. Tesla went from breaking ground to volume production in 1.5 years. Not only have automakers showed that they cannot scale EV, scaling vehicles was not the problem. So let's see this. 2018 Gigafactory was 150 gigawatt per hour. Terafactory is 1 terawatt hour. Smaller footprint per GWH. Negative 75% investment. Simpler and accelerating with scale 10x. Industry standard right now appears to be $80 per kilowatt hour of capacity. Again, it's not just about the cost, but the number of people required and the management bandwidth. So I don't think that people fully, so Sam Korus said that we don't fully appreciate the importance of the 75% reduction in investment per GWH and 10x reduction in footprint. More coming. So actually, I'm happy that he is explaining these things to layman like us, because at the very least, it's more important that we understand the science and technology behind the Tesla Battery Day, rather than the company saying that they will not be able to scale into 20 million vehicles until 3 years forward. Also, ARK Invest said that with the ability to collect driving data continuously from the vehicles, it will provide discounts for use of autopilot, and they believe that Tesla will be able to insure, because remember, Tesla said once that Tesla can beat Geico meaning Warren Buffett's insurance in the future, and will do insurance as well. They believe that Tesla's annual cost to insure a Tesla will be $3,300, less than the average of $4,539. So I'm excited about what's happening. And also, this is something that I want to share for you as well. This is something that, of course, people who are following Tesla, independent Tesla analysts, and these are mostly retail investors. So usually when you want to analyze Tesla, you might as well find investors who are OG, original gangster investors, rather than Wall Street analysts. So it's all about the flywheel, Elon Musk, Tesla. So actually it says here that Tesla is trying to do cash generated from the autonomous Tesla network. That would be from premium insurance. If you can recall, Berkshire Hathaway, aka Warren Buffett, the reason why Berkshire Hathaway has a lot of cash comes from Geico Insurance. Insurance, you pay premiums, and those premiums you will not need to get paid until a real disaster strikes, right? That's how insurance game makes money. Now, of course, that cash flow will be a flywheel effect. It will be invested in more Tesla factories that will produce more cars, and therefore that is a flywheel effect. That is the Tesla flywheel. It is very easy to understand. I mean, I'm not like a science geek. I'm not like a Wall Street heavy rocket scientist. I think this is something that every Tesla investor understands. Now, I want to share as well that when lithium costs can decline, then of course, not only will the cost of that Tesla vehicle be cheaper, it will also be more efficient. So that's something that is very important for all the Tesla investors to know. And of course, after the battery day, some people took the drop of Tesla to be bought. I wanted to share as well that, of course, we can discuss Tesla in terms of battery, in terms of vehicles, in terms of solar roofs, in terms of insurance. But as you know, Tesla has vertical innovation categories. And maybe that's why some people, instead of distributing their shares here, despite making a significant sum of money already, are actually buying more shares on dips. So instead of having very low Tesla, waiting for low Tesla, some of them actually bought Tesla after falling from 480 back to about 360. Some of them have bought at 360 and rallied already yesterday 10% to 390. That is a 10% intraday rebound for Tesla. We could see that this 330, 360 mark for Tesla seems to be the lowest price that we could get Tesla, especially since some people right now are not as dumb as before. They could see that innovation and gigawatts are being developed. The R&D of Tesla is far ahead than the other competition. Nonetheless, I wanted to share what's happening with the other competition as well. Let me share to you a few things on the electric space. Okay, so of course, in the electric space, a lot of people have invested, and China has been very serious in its single piece of climate news. Let me share to you a few things. Of course, indeed, Tesla has done so much in the world, not just about EV, not just about sustainable energy. It has propelled so much investments in solar panel manufacturers. Now, China is serious. If China is serious, China wants to actually beat the US to a carbon neutrality pledge. Instead of so far, China is saying 2030 to 2060. Okay, let us read that news if we can. Sorry, Bloomberg. Wait. Okay, let's try to read it. Um, I think the gist when I saw some people's comments, so I can't read the news. China wants to beat the US to a zero carbon emission climate pledge. Let's try to find that news. That was a September 22 news. If not from Bloomberg, then we might as well find it from other news sources. Okay, China beating the US to a zero carbon emission pledge. Hopefully, so 2 days ago, Bloomberg, less than an hour after US President Donald Trump took to the virtual floor of UN General Assembly, slamming China for its environmental record, Xi Jinping stunned the climate community, pledging that it would become carbon neutral by 2060. So China has beat US to a carbon neutrality pledge. China pointed the message to US tightening its climate targets. So I'm proud to share to you that in fact China has done so much with the sustainable energy world. Rather than talking about it, they have been doing it. So in fact, if you check all the solar panel manufacturers in the world, the most efficient have been Chinese manufacturers. And we have seen that some of the best, and we have invested in some of them. So I'll share to you the charts of some of these Chinese manufacturers. Sini Solar 968 is at all-time highs. Okay, let's take a look at each one of them. These are 10x trends. As you know, Tesla is proponent of solar, and a lot of these solar manufacturers have done well in not competing with Tesla, but complementing Tesla. So Sinli Solar has gone from $4 to $10, $11. This is still a continuous uptrend. This Chinese company has been doing the world a favor, and it is a 10x trend. As you know, it was just less than $2 last year. So 2019, $2 rallied to $7, fell down during the pandemic to $4, but the people who were really invested in the future of solar have picked it up 4, 7. It continues to go higher, 10, 11. I don't know the future, but I do believe that future is growing for solar. So 968 is a continuous uptrend for me, secular uptrend. Take note as well, this is a company that I studied intently, Canadian Solar. Canadian Solar serves global. So it's not just the US, it's not just Canada, it's not just Mexico or Japan. So it's really worldwide. It's a global company. That's why I like Canadian Solar. You could check the class. We made a deep dive. So it is a deep dive for those Awesome 10X members. All the Awesome 10X members can pay 2,000 pesos a month to check our library or records of studies. We've studied more than 100 companies because we've been starting since March, April, May, June, July, August, September. So every single day we do deep dives in classes. Canadian Solar was a deep dive that we believe is an awesome 10X trend. I think that this one goes $38, $50 in the next few years. Those people who have the chance to get, we got in at about 24, 23, 22. We weren't so early at 18, I'll tell you that. But even here at about $29, I do believe that Canadian Solar will continue to go further and further forward. That said, I also believe that America's solar manufacturer with carbide thelum is a great company. First Solar has given us an opportunity that is a 20% discount. From 77, it's now trading at 62. I would assume that those who don't have a First Solar can buy and avail this opportunity, given that Lucas Walton, which is a top shareholder, the Walmart Air, have divested a little bit, I think 8% at 69, and it gave you an opportunity to enter a great solar company. Hi, Jim. Hello again. Let me finish a few things further before I go answer commentaries. So as you know, we believe in solar future, and I have been following a lot of solar companies as well. Canadian Solar, Sini Solar, First Solar. I'd have to say that not just the solar panel manufacturers, I am also happy to share that Enphase and Solar Edge, these are microinverters in the US that have been continuously growing their market share. And this is a company that has done well in the last 2 years. In fact, this has done 37 times your money. Enphase is just $4. It was just about $2 in the last couple of years. From $4, let's say you've invested in the last 3 years alone. Let's say you've invested in 2018. 2018, not as early when you were investing in your Teslas. 2018, it was about $2. Of course, you should understand that every Tesla vehicle out there needs to have it charged, and most likely they have a solar panel home. And that solar panel have to have microinverters. Enphase is leading in that front. So Enphase Energy, Enphase went from about $2 to as high as $75. Yes, that's 37 times your money in just 3 years. Had you invested $2,000, you'd be sitting with $70,000 today. Now, Enphase at $60, and we actually started buying. I studied this company only last year. I bought some when it was COVID pandemic at about $30. I sold early as well, and then I'm not early, so I'm not $2 or $4 or something. I studied this company quite late. I only invested globally in the US with a focus only 2019. So Enphase was a company that really surprised me very strongly since 2019. And so when I got the chance to buy it at 23 during the pandemic, I got in. Now, I was still wrong because I didn't hold all the way. Nonetheless, Enphase Energy, I started buying and really doing a marriage style at 45, at $60. Yes, it rallied to 75. I think that at 65 below, it's still a buy. If you don't have Enphase, you might wish to consider this on dips. So far from $60 recently, it rallied to as high as 77 and then fell down back to 66, then back to 74. So a lot of traders are doing buy and sell the rip here on Enphase Energy. But I'd say that you could also marry it, not just trade it. Buy it for the short term, but also invest in it in the long term. So these are companies with great futures behind them. Of course, Enphase went from nowhere to 20% market share. The real market share leader when it comes to microinverters is SolarEdge. And SolarEdge has also done well this year from about $60 to as high as $220. Right now, it's $190. That means it's 3 times your money if you were investing in these microinverters since pandemic. Now, let's say you were investing in this company ever since last year or even 2018, then you'd have gotten 500% your money. Indeed, these are outperformers. We believe that these are 10x companies that will continue higher and higher. So should this world, let's say, truly go electric and truly go, actually, it's not truly. I do believe that the world is going electric and going solar. China, US, all these big countries are all pledging. Starbucks pledged, Toyota pledged. They want to do carbon neutral as early as 2030, 2040, 2050, 2060. So we will see a future of very strong 10x moves for these big companies as more and more homes become solar. And microinverter is necessity, AC/DC. So you will need SolarEdge or Enphase in your life. So because it's a necessity, I deem this as great investments. I also believe that SunPower, of course, today I am discussing super duper solar and electrics, because I believe that in the sell-off, these are the companies that are 10x companies that you should own. So SunPower, we have invested at about 7, and of course, it used to be $11 before because they gave out the Maction spin-off. So $7, $6. Indeed, it rallied to 11. Of course, from March, it was about $3. So that's times 4. 3 times 4 or $12. These are outperformers that we believe should be bought on any dip, just like Tesla is supposed to be bought on dips. So SunPower, I think, at about 10 or 9 can be bought. If you can buy at 10, yes, buy in and then buy again at 9. Or even if it goes to 8, the lower the market goes, the better for you because you'll get better rewards. Investors should be aware of what they've bought. SunPower Homes. SunPower is a company that even Apple believed in. All the Apple headquarters in Cupertino, California are using SunPower solar panels. So that just tells you that this is a company that has big corporations. Even Toyota is all solar panel, courtesy of SunPower. Now, of course, Sunrun, after the Vivint Solar acquisition, has truly gone so well. So from about $8 during March, it rallied to as high as $64 or 8x your money. So, of course, this company has done well in this year alone, but also has been doing so well in the last few months. The reason being, Sunrun has partnered with Vivint Solar and has become the number two company, the number one being Next Era in Energy, so NEE. So from $8 now it's $60. I don't want to buy at 60, but should this drop to about 50, I say that people who got in at about 20 or 30, or those who are lower than that, are still adding on to this position. So solar panels are a great business, and there are more and more homes that are investing. 55 would be the low today, and then currently it's 60. Should it fall 55 to 50, those are adding opportunities for Sunrun. Now, Vivint Solar will become Sunrun shares as well. So solar. Okay, let's talk about some SPACs as well. So FMCI and Graph fell a lot last night. There were talks that Tattooed Chef might delay their Tattooed Chef, which is FMCI, could delay their SPAC to TTCF. So I don't know the new ticker for FMCI, but basically FMCI is a SPAC that's gonna be Tattooed Chef, no? So nonetheless, we still believe that people will not have any problems with forum merger becoming Tattooed Chef. So even as high as $20, there is that arrow. Yesterday it fell as low as 16. So 20 to 16, we think that that volatility is an opportunity to buy. Note that we were saying a few weeks ago that we were buying at about 14, 16, 18, 19. That was the highest that we were willing to buy. We never bought high. And so at about 26, 27, we said that was a chance to sell. So this is just a chance for us to buy back. So after selling at about 26, 27, some of us even sold at 24. I think that this one, $20 below, is a buying opportunity. Now, for Graph, of course, I do believe in Luminar as well, GMHI and Graph. These are SPACs that are doing LiDAR technology. It is an electric future. It is an ADAS future. So 10x world for that. I think that Graph, of course, the SPAC started at 10. It rallied to as high as 24. So some of you guys might have been able to get in at 10, 11. I wasn't. To be honest, I only learned about SPACs around June, July. So I only started investing in Graph quite late already. When I learned that Graph was going to be Velodyne LiDAR, I invested at about 18, and then I bought more at 16 and 14 and 16. I still bought at 18. So 18 to 16 to 14, I've been buying there. Yes, it's 80-60% higher than the SPAC of 10, but I do believe in it being a 10x company, so I just really invested further. Now, Graph went to as high as 32. I sold some, honestly speaking, at about 25, 26. I held on to my souvenir. I did say that about 32 to 28 that there should be some selling pressure. But at 26 all the way to 18 that I was willing to buy. So 26 to 18, that is a big range, but I think that 26 to 18 are all buying opportunities. Those of you who have or zero Graph, I'd say that the downside for Graph, it's not going to go to $10. I think the downside, if you're buying at $18.50, would just be $16 again. So 26 to 16, let's say your average is about 21. I'd say that those people who buy Graph at 21 have a great future. Graph will become Velodyne LiDAR. For those who aren't aware, let me just show you a few slides on Velodyne LiDAR. So Graph is a company that I believe is a 10x pick. We did a secular deep dive on Graph and GMHI, Korus Metropolis. I would like you to join our inner circle to see deep dives of our analysis for companies like these. 10x companies that are worth your life, worth your investment profile, especially if you're thinking to 10x your portfolio. So this was a company, 10x in my view, since July. Let me try to find my slides. July. 10x moves from companies you've never known of or should be aware of. So let me see. Let me find that because I studied it quite early. Velodyne LiDAR, the eyes of the driver. So I covered it July 6, 2020, and we bought it, and the drunk driving for good and more. So that's something that I believe in. Safe mobility as a service. Velodyne LiDAR, I have some slides here for those who aren't quite aware. Let me just load it for you first. So Velodyne LiDAR, the founder is David Hall. He's the father of LiDAR. David Hall invented 3D LiDAR to give autonomous vehicles real-time 360-degree vision. So Hall is an engineer, also billionaires 2020. He founded Velodyne in 1983. He's going to be the SPAC of the blank check company of Graph. Velodyne LiDAR provides smart, powerful LiDAR solutions for autonomy and driver assistance. It's called the ADAS trend. Headquartered in San Jose, California, Velodyne is known worldwide for its ultra breakthrough for LiDAR sensor technologies. They even have the $100 LiDAR. So ultra puck, cost-effective puck, autonomy, advancing alpha prime, the Vela Ray, the Vela. So you could learn more if you just study it for yourselves, or if you don't mind paying us, then you could pay $20 per month and check out all of our great, awesome 10X coverage. Rapid adoption of Velodyne LiDAR across industries, mobility, public utility, UAV drones, defense, industrial, agricultural, security, mapping, last mile delivery, and smart cities. We did a lot of deep dives on this. So a lot of these companies are automated with Velodyne LiDAR. So our business focus is really to invest in 10X trends. So these are some companies that are using already Velodyne LiDAR sensors. We have shown a lot of videos, partners. These are some of their partners: Geodetics, Robotic Research, Nightscope, Local Motors, Yellow Scan. So Accurate Vision. It's really an amazing company in my view. Robosavvy.com. So it really allows your robots to see via the LiDAR technology. That's why I called it. That's why I called Velodyne LiDAR the eyes of the driver. But most people, they are wrong in just thinking that it is just for self-driving technology. But you could learn more about the company, the robots, and what LiDAR does. The scale of applications is amazing. So just a few things to share to you. LiDAR can be applied for 3D imaging. It is a fast-growing industry. Digital elevation models, forestry management, precision forestry, deforestation. So crop viability, crop mapping, crop categorization, molecular density. Okay, so I don't want to give away everything. You study it for yourself. But as you well know, I am a very big proponent of Graph. And I am a big believer, and I am an investor. So hi, awesome 10X followers. Hello as well, Marian. Miss Nikki, is Lemonade a good buy? Is it a 10X or is it just a short-term play? Now, what you'll notice is that I only do deep dives for 10X companies. I don't do deep dives for prostitutes, meaning I wouldn't spend an hour teaching people, or 1.5 hours, if it was not something that I will invest for the next 10 years. Lemonade, I gave it as a free Friday class pick. Today is a Friday, so you'll see me also talking about a new Friday pick. But you'll notice that all my free Friday classes are just 10X industries. I don't cover short-term plays. So Lemonade to me is a good company. But that is just me. I could be wrong. I think my batting average for 10X trends is about 80%, 80 to 90%. So you might as well follow Awesome 10X. Now, okay ba mag-enter ulit ng Merrimart? Merrimart is a Philippine company. This is a global market update. So I don't think that you're in the right streaming. But either way, I think Merrimart is a speculative company. I don't think it is a 10X company. So it is just a short-term trade. Merrimart could go 250. It could go 350. I think it's like more like a toss a coin type of company. Hi, Annie Lynn. Is it okay to Alibaba and invest for the long term? Alibaba, in my view, wins in the e-commerce and the cloud space. Alibaba has done payments as well. Alibaba is a company that went from a $100 million company when Jack Ma was invested by Masayoshi Son. He got a 20% stake at $100 million. And then right now, of course, Alibaba is a $600 billion behemoth. So some people have done 600 times their money. So I don't think that Alibaba is a 10X company. Nonetheless, it is still a good company, but it's not 10X. So if you're looking for 10X, like make your $1 to $10, make your $10,000 to $100,000, Alibaba is not one of them. Nonetheless, I bought Alibaba at $165 last year, June 2019. Right now, Alibaba is trading at 265. It's still a great investment. That means that up more than 50% just year on year. But I would argue that if I'm going to buy and invest for Alibaba, I'd have to buy it lower than $240. It's right now trading at 270. I don't think 270 is compelling for me. So I'm not going to buy it at 270. GMHI versus Graph. Between the two, I think Graph, aka Velodyne LiDAR, has more. It has more businesses. So I am not. But then again, GMHI, Gores Metropolis, has a great company. LiDAR. LiDAR is in most vehicles. So in terms of applications, I think Graph is being applied in many other applications today with more customers versus GMHI. If you have only one to choose, I'd still choose Graph, but I chose both. Like I have in my portfolio both. Graph and GMHI, I bought Graph at $18.50 last night on the drop. How much is a good buy for Etsy, Lululemon, The Trade Desk, and Roku? Etsy, in my view, is a great buy around the $90 to $100. I think Etsy right now is $110. I might be trying to cheapskate my way in a great e-commerce company, but I already have C Limited and I already have Shopify. So in terms of e-commerce, I also have JD and Pintuotuo. Etsy is a great company in my view, but I'll buy it if I could also get a great company at a great price. Lululemon, I'm late in this party. It's already gone from $3 to $330 since the last 10 years. I think Lululemon has been 100 times company. I think the trend is intact, but I wouldn't buy Lululemon at current levels. I might just invest in other companies in the secular trend of athleisure. So Lululemon is a beneficiary of athleisure. In athleisure, I prefer to own Nike and Puma personally. So I'm not too much of a Lululemon fan. Some of us have invested in Nike when Nike fell this year to about $65, $67. Some of them invested at $85, even as high as $90. Right now, Nike at 127. I wouldn't buy it at 127, but I don't think that it is a sell either. The Trade Desk, I think, is not investable at current level of $450. I'd wait for it to go below 400 or even below 350. That said, it might never fall, but I wouldn't buy it. Roku at 180, 190. I wouldn't buy it here, but I wouldn't sell all of my shares. I do think that Roku has a great future. Of course, the connected TV is a secular trend. More and more people, more and more households, not just in the US, but also in Brazil, will have Roku in their TVs, smart TVs. So I think between these four, Etsy, Lulu, The Trade Desk, and Roku, at current price, I'd be okay to buy Etsy. Roku, if it drops maybe $150 again, then I might continue to buy again. But current level of 180, I think is quite expensive. I might wait lower. So thank you very much for all of you listening. I do wish to share to you that we have the awesome10x.com. Awesome10x.com is a 2,000 pesos or a $40 per month, wherein I give deep dives every day. And you could see that Eyes of the Driver, this is just one of the deep dives that I've done. And you could see more in-depth coverage of 10x companies. And I do hope that you subscribe, listen to our channel, watch our videos. Our videos are proven. You could see that we don't mind. We share our free Friday class. You could study with us. You could be a sit-in every Friday. You don't need to pay for us just to watch us Awesome 10X. We do appreciate if you could like so that the more algorithms can promote Awesome 10X to our to fellow Filipinos or non-Filipinos out there. Thank you very much and have an awesome 10X portfolio. Thank you. Bye-bye.